Welcome to today's episode of Tax Matters. My name is Pius Christina. On today's episode of Tax Matters, we'll bring you the concluding part of the guest interview with the Director, Government Business Tax Department, FRS, Mr. O.O. Faniyi, on the role of ministries, departments and agencies and local governments as agent for tax collection. We shall also bring you the story of the just concluded 3rd International Conference organized by the Joint Tax Board from Monday 28 October to Wednesday 30th of October 2013 in Abuja. Stay with us, don't go nowhere. The Joint Tax Board consists of Chairman of State Board of Internal Revenue and some government parastatals. It is chaired by the Chairman of the Federal Inland Revenue Service. Among other things, the Joint Tax Board, through constant deliberation, contributes to the harmonization of tax matters across the Federation with the aim of enthroning a smooth tax administration system in the country. It is no surprise that the theme of this year's conference was Taxation and Development, Key to National Transformation. The 3rd International Conference was graced by dignitaries and participants from Sri Lanka, Ghana, United Kingdom, and the host country, Nigeria. Goodwill messages were delivered by Chairman House of Rep Committee on Finance, Abdulmumuni Jibril, former Accountant General and former Executive Chairman FRS, Mr. J.K. Naeju, and National Chairman, Salaries and Wages Commission, Dr. Richard Agbulem, amongst others. The Acting Executive Chairman of the FRS, Halaji Kabiru Mashi, in his welcome address, spoke on the theme and importance of the conference.
The theme of this year's conference, which is Taxation and Development, Key to National Transformation, is therefore in recognition of the close linkage between taxation and development, especially in an emerging economy such as Nigeria. As tax authorities and revenue-generating agencies, we have a responsibility to strongly support the drive by government at all levels to transform the Nigerian economy. At the federal level, we are working very closely with other relevant agencies to support the transformation agenda of His Excellency President Goodluck Ebele Jonathan. The same efforts are also ongoing across the 36 states of the Federation. We therefore all have a similar role to play in support of government within our different jurisdictions. This conference creates such an opportunity for us, and we expect that there will be robust deliberations on those issues that will enhance the collective sense of ownership of the tax system and how it can contribute to national development and transformation.
Mr. J.K. Naeju, former Accountant General of the Federation and past Chairman of the Federal Inland Revenue Service and the Joint Tax Board, had this to say in his goodwill message.
Taxation, by its definition and practice as a profession, is as old as government. You cannot talk of development without taxation. You cannot even put taxation behind. It has to be in the forefront. In this deliberation, always consider the area we call challenges in the tax arena and make sure you bring out suggestions to the floor so that when the communique is going to be produced, the government that is rapidly undergoing transformation of the economy can have something to work upon. The legislature too can have something to work upon. I will drop one or two in the course of this very short address. One is the multiple taxation. Though it's in the book, in the letters of the law, but yet, as now a tax practitioner, I can see across the country, it is still there. So we still need to address it more. And the other one is about the IGR. How do we raise more independent revenue for our various tiers of government, the local government, the state, and the federal? Why do we need to raise more revenue? That one is so obvious. Instead of going cap on hand all the time, looking for money for development, we should be able to go deep and make it a robust one.
The conference was officially declared open by the Coordinating Minister of the Economy and Minister of Finance, Dr. Okonjo-Iweala, who was represented by the Permanent Secretary, Ministry of Finance, Mrs. A.M. Nwobai.
While mindful of the commendable successes already recorded by the Federal Inland Revenue Service in revenue collection, which in the recent past has increased by an average of 26% per annum, the current situation of tax revenue to GDP of 7% is significantly lower than most emerging market countries. The average tax revenue to GDP in most of such countries is between 15 to 20%. It is therefore imperative for Nigeria, as a middle-income country, to strive towards increasing the tax revenue to not less than 20% to GDP. Increasing tax revenue in Nigeria is, however, not without some challenges. The high level of the informal sector in the country poses a considerable challenge to revenue mobilization. Most of the companies doing business in the country are not registered with the tax authorities. Those who are registered do not file their annual returns consistently. There is also the problem of multiple taxation, as earlier mentioned by Mr. Naiju. In order to address these challenges, particularly the hydra-headed problem of multiple taxation, the National Economic Council recently constituted a committee which was inaugurated on Monday, the 21st of October 2013, under the able leadership of the Coordinating Minister of the Economy and Honorable Minister of Finance, with the mandate to harmonize taxes and levies across the country. I urge the Joint Tax Board to play its role of ensuring harmony in the application of the tax laws in the states towards proper implementation of the taxes and levies under the approved list for Collection Act. In addition, all the state tax authorities are enjoined to complete the process of taxation registration, that's the taxpayer registration number, the TIN project, which will form the basis of having a taxpayer database in the country. Doing this will provide a platform for an efficient tax system, increased non-oil revenue, and a friendly environment for investment.
Papers were presented by experts across the globe, after which followed a robust question and answer session. The following day, after the paper presentation, followed a syndicate session where participants came up with various suggestions on how taxation can be effectively utilized to increase revenue generation. The conference wasn't all discussions and paper presentations. Participants were hosted to a colorful gala night with cultural displays and presentation from the Student Advocacy Initiative style. Tax Matters spoke to the Secretary Joint Tax Board, another discussant, on the theme and importance of the conference, as well as other tax-related issues.
We have chosen this topic and selected experts from across the continent to come and discuss the topic. We try to share their experiences, and we try to also to bring to table the issues we have in that regard. The trend everywhere now is automation, is to automate the tax system, where we want to achieve real tax collection process. For example, you want to ensure that as soon as payment of tax is made, it goes straight to the relevant account without any manual process. So you cannot achieve that without automating your system. Where you have low compliance to taxation, it definitely will have effect on the development and by extension to national transformation.
Taxation is key to national development, and it can be used as a tool. It can control corruption. It can discourage the consumption of certain goods that the society does not want. It can actually improve the behavior of people. For transformation, what the government needs to do is to be sincere about taxation. Sincerity means that every individual who is taxable should be taxed. Every income that is taxable should be taxed.
Globally, there is this economic crunch, credit crunch, and so donor support and assistance to a lot of countries, including developing countries, have dwindled. And so there is pressure on developing countries to also try and mobilize domestic resources. To be able to do that, we need to look at the tax systems in place, because the main source of revenue to governments is taxation. So we need to look at the existing tax system, what are the areas we can improve upon, and also therefore lead to increased revenue mobilization so that we can reduce the dependence on aid that is dwindling and slowing down. That is the essence of the discussion, because in the 21st century, things are changing globally. And so the question is, how do we situate our system as Nigeria so that we benefit from whatever we can mobilize within our constraints?
Yeah, okay. Yeah, waiting be this.
The deduction now for withholding tax.
Withholding guinea. Look, if you not pay me my correct money today, hey, Munu get made you half for.
But madam, should be your company paying income tax.
Yes, that one I enough load for me to carry. Why in I won't come add join them again?
You see, withholding tax now advance payment for income tax. So when you do some kind job like contract, we go remove small from them when we won't pay you.
I don't go contract am up. I bet tell me another.
No. We must pay the money to FIRS within 30 days, and they go give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So
now to help make the money where you go pay at the end of the year small.
So this withholding tax something, it be like part payment of one.
Exactly, madam.
I beg you, give me my check.
Remember, come collect your credit note.
Withholding tax, now for we own good. FIRS, it pays to pay your tax.
Welcome back. It is now time for the guest interview segment, which today is the concluding part of the interview with Mr. Femi Faniyi, Director, Government Business Tax Department, FIRS.
What are the emerging tools being developed to boost compliance in addition to the conventional strategies? Because you have told us several times that the strategy of the GBTD, differs from that of those who are collecting companies' income tax. So what are the emerging tools?
One major emerging tool, it has to do with technology. Okay. I don't know whether you have heard of this acronym called GIFMIS. GIFMIS. GIFMIS is about government integrated financial management system. Yeah. Broadly, that's what it is all about. And that was developed at the federal level. It is a software. You know, these days we're in a computer age. There is nothing that technology, especially in terms of computer, cannot achieve. Government has been so concerned about revenue that should be coming from its agencies, not necessarily tax. Talk of NNPCs, remittances, talk of the aviation money, NPA, port charges, and all the rest of it, and the aviation and all the rest of it. And that why are things, there is that fear that there is not enough transparency. And therefore, federal government developed this GIFMIS to say, whatever is going on in your finances as an MDA, we want to be seen, we want to be able to have a link to it and be able to see how money is coming in, how money is going out of your accounts. So that has been working well for the federal government. And then at FIRS, we now thought, why don't we have a response to that? It is still government money. Oh, the tax we collect is still going to government. We sold the idea to the CBN. Let's also develop our own software. We call it Remitter. Remitter is this interface between FIRS and GIFMIS to be able to track the tax aspects of these financial transactions that are made transparently open now, in such a way that we can capture our VAT, our withholding tax from capital payments at source, right from there, right from the bank. You don't even have any control of it. It is not possible, therefore, to say you are delaying payment or you are converting or you are diverting again, and it becomes very open to us. We capture our own quickly and we get away. So we just started that about 1 or 1.5 months ago at the federal level, and I'm beginning to realize the effect of it. It's going to soon bring about a huge turnaround to our taxes being collected, and maybe going forward I should think that we should be able to also impress it upon the states too to do that. And then our human intervention will be very much less, and it will be like we'll be collecting our money with ease when we get to that point. So that's one major emerging tool. And another one, which is not really recent, it has been there for some time now, but it's a tool that has been helping us when we need to resort to it, is this need to get across to the Federal Accountant General, Accountant General of the Federation, for hearing MDAs that have a very established liability, no dispute about it. It is clear that you have this money to pay us, you refuse to pay us. There's a provision in the FIRS Act that we can make a case to the Accountant General, and then they can deduct from their own allocation at source and remit to FIRS. So that's also peculiar to MDAs, to GBTD.
We wonder if there are challenges that your operatives face on the field. But in taking that question, we also want you to look at the local governments in the whole matrix. You collect from federal agencies, state agencies, and the local governments. But several times we've heard that local governments are in the habit of doing things on direct labor basis. And so VAT will not arise, withholding tax will not arise. Take that along with the challenges that your operatives face on the field.
I would take it off from the local government matter, vis-a-vis direct labor, particularly. Yes, that's very true. That's one challenge we have mostly with local governments. If they say that they are operated on direct labor basis, we have a problem there. And the problem is this. When it concerns withholding tax, not necessarily VAT, when it concerns withholding tax, you are not under obligation as an MDA or even as an individual company or whatever to to deduct withholding tax. It is taken as a business, a work in the ordinary course of business. So if a local government gives out an advance to one of his staff, go and clear that debris in that certain area, or go and weed this area of town, and they just pay like allowances or wages for those who do the work, that is direct labor, and tax may not come in. It's a different thing if that same work has been awarded as a contract and the contractor will have to suffer withholding tax. So if it is true, really they are correct not to pay tax, but what we have realized is that they hide sometimes under this canopy. They use it to want to confuse our operatives. Matter of fact, management just discussed on it lately of the need to do a circular that will revolve around what rules government has had for direct labor. I know that financial regulations have some things to say on it. Public Procurement Act will have certain angles to it, as in prescriptions. For example, to say you cannot award direct labor that is more than so amount, the threshold, and so on and so forth. So that is what we want to face, to develop a circular to guide our people on the field, and that we can implement against the taxpayers. So that is that. But in respect of the other general major challenges, the first obvious challenge is that some of our MDAs, they refuse to charge. Some behave as if they are not under obligation to withhold. Let me just put it that way, not to charge. They are actually not charging. It is the contractor that will charge them VAT. Then they will withhold that VAT. They will also withhold the money of the contractor, that is his income, and pull the two together and remit to us. But some want to behave like they are not under obligation to do that for us, whereas it is mandatory. It is the law. The other angle to that one is that some do it, but to now remit the money, it becomes a problem for them. It becomes part of their operational funds. Some are actually diverted or converted. So these are the things we see on the field. Beyond that, when some even faithfully do it, there is the need for withholding tax especially to have a schedule before banks can remit that money for us, because there's no point you deducting money on behalf of people and we can't identify who are the beneficiaries of this amount. So the software, the system with the banks is such that withholding tax cannot go unless the beneficiaries are known. So some will do that without that schedule. Some will award contract without TIN number, and without TIN number, the software cannot even accept such payments of the contractors, and therefore we have so huge amounts from these people, the MDAs that are faithful in doing it, not doing it the right way. Such money are just hanging in the bank. We have seen millions here and there that it's just by the grace of God we stumble on some, because without you sometimes telling us, we may not know, but we are doing our monitoring, we are working hard that as much of such that we stumble on as possible, we see what to do to get the money. And some of the banks that are not getting across to us and are taking advantage of that, they are being taken up. As a matter of fact, in the past, banks have been delisted from our collection system on that basis. Maybe lastly, another one that I can mention to wrap up that area is the issue of wrong rates. Rates for VAT, it is very clear. 5% is 5% once it is vatable. It is, thank God, that's one of the things that is making our system to work, because it is simple, 5%. But in terms of withholding tax, it's most transactions are also 5%, but there are those that are 10%. Professional services, mostly royalty, thank you, royalty, rent, 10%. There are things that are 15%, but the general belief is that all withholding tax is
just take VAT 5%.
Is 5%. Yes, not to talk of payee. Payee, there is a graduated table of what should be paid by each employee, but they sometimes don't get it right, and we don't get our correct amount. So those are the basic challenges that we are facing on the field.
We are coasting home. What's your message to the MDAs and the local governments?
Our customers, the MDAs, please, I enjoin you, cooperate with us. It is what you bring in that we share at the end of the day. I don't think an MDA should have a moral obligation to collect amounts being appropriated if this money is coming from a pool of taxes and some other revenue that is put together from other sources, and you say these are my own needs for the year and they are giving you out of it. And yet when we come calling to say the aspect that you should return to government, you don't comply. I don't think it is best. Beyond that, I also want them to know that the withholding tax they are paying us, or the payee, it's not their money. Let them not be afraid. Let them not see it as putting more burden on them financially. It is the money of the contractor that they are removing something from. It is the salary of their staff that they are removing something from. The only one that is like a burden out of these three, and it's just one out of three, is the VAT. And let me also say, please, if you have 100 naira to award a contract of 100 naira, if that is your appropriation for a particular project, you have 100, that means you cannot award an 100 naira project, because it should be 5% plus this, the 100. That 100 should turn to be 105% if you like. That is, it's not until you have 105. Let me just simplify it further. If you have 105, it is then that you are qualified to award a 100 naira contract, because 5 naira is the VAT that you are bearing on top. 5, you give it to the inland revenue. 100 belongs to your contractor. Even though you don't give him the whole of the 100, you still remove our own and give to us. So please, these are my concerns. And lastly, lest I forget, don't award contracts without TIN. TIN. TIN is getting to be a universal thing now. not just even amongst within the Federal Inland Revenue Service, but there's collaboration amongst all the tax authorities within all the states too. It's a JTB affair, and even internationally, the issue of having uniquely identifiable number for each taxpayer is an international concept. So please don't award contracts for a taxpayer that does not have TIN.
We thank you most sincerely for coming out to the program. We wish your department the best of luck. I thank you once again for coming.
I'm grateful.
Yes.